The entire global credit system was built on the assumption of infinite growth. But what happens when AI makes the real economy collapse into a deflationary spiral that nobody is pricing in? Michael Tanguma, CEO of Onramp, is back on Bitcoin for Millennials. We're going to talk about the loss of monetary soundness in our financial markets, why the smartest actors on earth are all moving into the same three assets, and we'll look at the cracks already forming in the old, dying TradFi system. And stick around because Michael is going to reveal why he thinks a 5-person team is going to outbuild JP Morgan and other TradFi firms in the next 5 years. If you were enjoying my content, it would mean a lot to me if you could subscribe to the channel and like this video to support my journey. Thanks a lot. Now let's dive in to this episode. Michael Tanguma, welcome back to Bitcoin for Millennials.
I'm glad to be back. I'm a little disappointed because we just had the real podcast conversation the last 10 minutes and you refused to hit record because Brom didn't want to lose any followers, and I get it. So
no,
it's okay.
No. Well, this was just a warm up. Now you're warmed up to really bring the heat.
We'll see.
Okay. Well, we talked yesterday and the day before, right? So we always have something to talk about. But I just what I think it would be nice to just kind of go. I wanted to say go around the field and kind of see, kind of discuss what you're seeing and get your insights. And you send me some topics beforehand, which I think I'm also looking at. So I think we'll have a nice conversation. And I just wanted to start with the whole AI, productivity boom, deflation development, right? So I think you on your podcast and I've also talked about this a lot, right? Increased AI productivity brings a lot of deflation, which obviously bumps heads with the inflationary fiat money, which you would use to value the productivity gains gained by AI. And I heard you talk. You mentioned a credit air pocket, which I thought was really interesting. And you say that's something that no one is pricing in. And this question around what happens to the credit if there's a real deflationary force through rapid acceleration of AI. Maybe that's a nice point to start there with your thoughts on that.
Yeah, I think I can't help but come to the full circle of we live in the most exciting and also treacherous time to exist when you think about inflation, the money changing, AI hitting us, layoffs, and ultimately it kind of goes back to a lot of the things you talk about and we discuss once you learn about Bitcoin and also just the status of the environment. They're so far-fetched post. Everyone talks, there was a good tweet the other day about pre-2020 and post and how we're in different worlds. And I think that when you look at I've always thought about when Bitcoin was going to do its real thing and go to 500K to a million or million plus, it would be natural, it would make sense the world to look fundamentally different, or at least very chaotic, because that's just the world pricing in this other asset that's never existed. But then what else around it is requiring it, that capital to move into it? And so I'm bringing that up because it ties into what you're discussing with air pockets, and that independent of AI, there was fundamental air pockets. They've existed for a long time because of the amount of leverage in the system, and that it continues to de-lever. 08 was our first big one. We've had 14, 2020. Seems like we're on the precipice of another one. And then you add the AI narrative, and it's not even necessarily fully AI. It's the fact that AI is skewing a lot of the multiples and values on these firms. Think about the stock market and SaaS companies, that now individuals are there's no margin for risk there, because it's what if they take even 10% of your clients? You really look shaky. And then you have the private credit seizing. And so you tie all that together. And then there is real deflationary components of people can just start competitive businesses and undercut the market. And that's real deflation. So you add all that together and it just gets really crazy. And there was a tweet we talked about yesterday, which was Anthropic getting to $30 billion with 2,500 employees, which is just an insane $30 billion in ARR. And the comp that was the closest was it took Facebook 14 years and 85,000 employees to get to that similar reoccurring revenue. And so we're just in the early stages of this. And I think what gets exciting if you're a Bitcoin investor and you think about building is it feels far away, but this is the first time you can kind of squint and see within the next 12 to 24 months how the narrative around AI and Bitcoin from payments and tooling will start to really take off because it's just simply better tech for that. And then the other side of it is the savvy entrepreneurs, as inflation's ripping and as the credit market is starting to teeter and people are printing capital, you're going to start to see real companies stack Bitcoin on their balance sheet in the same way companies are stacking AI on their balance sheet from a workload perspective, and they're out competing others. And that's when this whole thing gets really interesting, because it gets less about ideology or less about even somebody having to understand there's 21 million. It's just like, oh crap, this is, I call it like a nuclear reactor for my money. And it's just the best thing that's ever existed.
Yeah. I think there's two things that I notice. One is that conceptually, I think we've talked a lot, and just in general, people have talked a lot since like 2008 about how fragile the fiat money system is, that 2008 was never really solved, right? I actually just saw a tweet that the Treasury bought back 15 billion in treasuries, like the largest buyback ever. And it's just stuff like that I think we talked about conceptually before, and was part for a lot of people in their like Bitcoin thesis, like you should own something that's outside of this fragile, fundamentally flawed and now fragile system. But actually today, like we're kind of like seeing these cracks, like you mentioned private credit, right? Like, I don't remember the exact headline, but it was like, they said like you can only take out 20% for the next 5 years or something, right? Like this. It's such a crazy bad signal. And there's still no panic, which I think just also shows that we are very far ahead. I also saw yesterday a video by Reese Witherspoon it went viral on X, where she was talking about like, holy shit, this AI thing, is there's something really going on. And there was like all these normies like replying. So I kind of feel that an American hodl said this to me once, right? Like Bitcoiners are 8 years ahead of people. Like it's actually true, right? So we acted upon it. Upon a conceptual understanding, we acted on and created a thesis, but now it's actually happening. And so there's people that don't think in that way that are actually seeing just with their eyes, right? What is actually happening. And so at first I thought like Bitcoin and AI is like a parallel thing, but it's going to converge, like you're saying in your example, right? It is, how do I protect the capital of my company? One, right? If all these classic types of ways actually don't protect me from the loss of my purchasing power. And then, the thing that's converging is, okay, how do I optimize my productivity by using AI, which essentially means I need less people, right? And these things converging, I think, will kind of like amplify these underlying cracks that are kind of already there. And that people are slowly starting to see now. And I also just wanted to ask you, like, what do you think we should look out for? Like, we've been talking about the thesis of Bitcoin and fiat money debasement for such a long time. Like, for you, what would be like the real signal where you would say like, okay, now it's actually happening, or there's like a next phase, right? I don't believe in the suddenly, like we wake up one morning and there's ultimate chaos, but like, what are the things that you were looking out for?
Yeah, it's a great question. I think, don't let me lose the track because I'll come back exactly to it. But I think the answer that comes straight to my head is settlement for commodities in Bitcoin from sovereigns, that this thing's real and working. One thing I was going to bring up yesterday, and I know you've had him on, did Parker, when he came on, talk about kind of his genesis story and going down the rabbit hole of the Fed having to unwind its balance sheet?
Probably, but I can't remember.
There's really two great. I'll share them with you because I meant to, and then maybe you can put them in the show notes because they're old. They were from 2019 and 2020. And it's important because part of Parker's story, and I've always held that Parker understands what's happening probably better than most on the planet Earth here, because he understood
Parker Lewis for the listeners. Yeah.
Because he understood the money system, but then he understood Bitcoin, and then he ultimately came to the conclusion that Bitcoin was a solution to the problem with the money system. And he was tasked with having to understand, to your point, you brought up '08, what would happen when the Fed has to unwind its balance sheet, because it ultimately injected all this liquidity. And as he was going down that journey, he understood that it was ultimately impossible. And so he's done some presentations, but why I'm bringing him up is because we usually think of '08. But if you go back from 70, and specifically like 1990 to 2008, even though in relative terms you see all this money printing and the chart goes up into the right past '08 and then 2020, but you can see that leverage coming into the system from 71 and really the '90s. And so it was always understood that the market has to delever because the credit coming into the system is fundamentally unsound. And then when it delevers, you have to inject more.
If your Bitcoin doubled tomorrow, would you feel good about how it's secured right now? Most people haven't really pressure tested that, and I get it. Some people are comfortable taking full control of their own keys, but others want security without having to manage it all themselves. That's why I partnered with Onramp, multi-institution custody where your keys are held across independent institutions in multiple jurisdictions. No single company can access, move, or lose your Bitcoin. Lloyd's of London insured, inheritance planning built in, and a team that walks you through the entire setup. They serve clients globally, whether you're in the US, Europe, or anywhere else. Book a free consultation at onrampbitcoin.com/Bram to learn more. That's onrampbitcoin.com/Bram. Most people stop too early with Bitcoin. They buy it, maybe move it to a wallet and think they are done. But they're not. The real questions are how you're securing it, how private your setup is, and whether you're verifying your own transactions or trusting someone else. And what happens to your Bitcoin when something happens to you? This is the layer that most people ignore, and it's the most important one. That's why I've been working with the Bitcoin Way. They help you set up self-custody properly, including privacy, cybersecurity, inheritance, and even running your own node. And they do it without ever touching your Bitcoin. They're not a custodian. They're your support team. If you're serious about this like I am, go to thebitcoinway.com/Bram, that's BRAM, to book a free call. They'll walk you through your setup, personalize everything to you, and help you get a much stronger position very quickly, whether you're a beginner or more advanced. That's thebitcoinway.com/Bram.
If you're lending out credit to a restaurant or whatever it is, an individual, and you have interest rates that were at 0 or 2%, and the interest rate got jacked up to 5%, naturally you're going to start to see cracks. So we kind of understood this was going to happen because it's not only the interest rate on the individual that's having to pay, it's that as interest rates go up, the cost of capital, the layoffs happen because it costs more to run a business. And so there's less consumer demand for products. And so this was always kind of like baked in. We're just finally starting to see that. And then I think the Iran stuff is going to accelerate it. Now, what you said about like what would be the moment, I think we're on the precipice. You know, there's obviously a lot of conversations, Larry Lepard, good friend, the big print, that we're on the precipice of that because we've known that things are already cracking and they have to inject liquidity. There's a lot of stuff in the States going on with like tariffs and giving out like different stipends. But where I think this really hits a velocity of like, okay, the cat's out of the bag, might have already happened, and it's the Iran oil stuff. Because I think that was underappreciated in the sense that we talked about a lot yesterday, but if sovereigns need oil, if they don't naturally create it in their local geography, and if they don't get the oil, their constituents and citizens revolt. Well, and you're basically taken out of that system via SWIFT or whatever the mechanics are, well, you're going to need a form of trustless money to coordinate economic activity to bring that in. And as you see more of that, what that's telling the market is there's something else out there that people value and has value enough to settle to bring oil trade in, and then everything else ends up downstream of that. And so I think as we start to see more of that pick up, BRICS countries and others start to rely on that, you naturally will see this play. The only other thing I'll say is like this is already kind of happening with gold and the whole yuan and like net settling in oil. The fact that people are saying the dollar's cooked and they're not holding treasuries is the canary. It's just when does Bitcoin price that in?
I agree, and I also think we kind of touched upon that. I don't know if when we talked before or yesterday. I definitely talked about this with Peter Dunworth. This unwinding of the balance sheet, right? Like how can you inflate the debt away without actually blowing up the world or your own country, right? Because slowly but surely, right? In some weird way, it takes, what is it, $1 trillion every 2 months or whatever for people to notice that there is, the promise of paying back the debt is far gone, right? More and more people, or less and less people are buying American debt, less and less countries are buying American debt, right? So this kind of lingering, inevitable issue of the loss of trust in what has been the global reserve currency, is just getting more and more to the surface. And this idea of inflating the debt away in a neutral asset that a few million crazy people hold, instead of into the American housing market that would hit everyone, I think is a big but not so far-fetched idea, right? Like basically Bitcoin is kind of like a blessing in disguise, and I just wonder what you think, like, because you as the global reserve currency that is being unmasked as the emperor has no clothes, basically, which is clear, I would say, but not to the entire world. They know that point is coming, right? So there has to be some sort of action before, so it doesn't look like a defeat. I just wonder what you think, because I know you have thoughts about inflating it away into Bitcoin, for example.
I think there's two big components here that have independent of nothing to do with what we're building or who we are. It's maybe why we're building the business that we're building, but like that I think get widely underappreciated. And the only reason I can say, why I have this thesis is because I've just been doing this for a long time, whether it was at Unchained or here at Onramp, and also just having so many conversations and pattern recognition. And the two are, one is less controversial, just doesn't get talked about, is we conflate investing and then savings. Right? Because the notion of saving is you already invested your time and risked your time and capital, your human capital, to go out into the market. You could get hit by a bus, you could lose the money, whatever it is. So then the savings are really meant to preserve and then provide that optionality into the future. That is already just inherently limits the ability for people to grok Bitcoin or gold, because that just hasn't been told for the past 100 years. So I think that ties into a lot of this, of the market recognition. The beauty of Bitcoin is it's in its monetization phase. So that's what's beautiful. You can reduce all the counterparty risk. You can strip all of that out. You can hold a form of money that gives you optionality, and then you still get the upside of venture growth. Like, that's where its value is. But the other thing is that we really underappreciate, I fully believe, the reason why when anybody listening and you as an individual tell friends and family that are out not, thinking maybe you're a little crazy, is they believe Bitcoin is a Ponzi or speculative because the subconscious in their brain, all they see across social media and across Time and Bloomberg is the asset keeps getting lost. So you take this idea that there's never been a new form of money, so you introduce that, and then it's ephemeral, you can't touch it, and then everything on the backdrop, the mosaic, the whole thing is that it keeps getting lost, it keeps blowing up, whether the counterparty. So the point is that you can give them the answer that Bitcoin is the solution to everything you asked and described, but you're almost giving them a problem, not a solution, because you're saying if you look and see the right thing, now you have to figure out how to actually hold it and not lose it. It reminds me of like telling somebody there's a better country, right? There's all this like crazy stuff happening across the world, and we understand the bull market for statism and everything, but people can't, you can tell them where to go, but you're not giving them the real solution because their family's there. Everything, all the inertia is tied to that. And so it takes a lot of courage and agency to go and say, look, I got to just help my existing, family, whatever the metaphor or analogy I'm making is. But similarly with Bitcoin, you have to do an insane amount of work to figure out if I'm going to actually put a material allocation that this is going to save me in my life. I got to go deep down a rabbit hole and understand how to back up 12 words, hardware device, all of that. And most people aren't willing to do. So I think like we'll have the market forces, but the thing that won't really fix this is really until solutions and products exist that give people real exposure and that don't keep them off sides. Because if that keeps happening and blowups keep happening, you're going to continue to have effectively this like barrier in people's mind to believe that this thing is insane and it's speculative because it keeps getting lost, or it's highly volatile because somebody just goes and loses 500,000 or whatever FTX number of coins were.
Yeah, I think there's also a huge psychological part there, just the kind of like a red pill of holy shit, I need to take real responsibility, right? Like the whole abstracted and outsourced responsibility in the fiat money system is obviously why the majority of people still participate in the fiat money system, because they think, I can trust this is proper, blah blah blah. Even funny, like today, yesterday we saw this Professor Zhang, right, like say like, where are the Bitcoin servers, and I had this tweet. I asked Grok, like, hey Grok, where are the Bitcoin servers, right? And then replied, and this went semi viral. So I have like a lot of people replying, and one person said like, yeah, why would you invest like tens of thousands of dollars in just ones and zeros and computer code? And then I said, dude, how do the Spotify songs reach your phone, right? Or like, how do the Netflix series reach your phone? Or where does the number in your banking app come from, right? And then he called me a retard or whatever. But the point is more that it's just a difficult subject, and so I do think that once you get there to a certain degree, then the second part is realizing that you have to take more responsibility than before, and a lot of people just do not want to do that, right? And this is also kind of why I think it is slow, this adoption, or people have like the wrong idea of what Bitcoin is. Like you just said, like some people think it's an investment, right, or a gamble. I mean, you are in the room with a lot of TradFi people. This is something I wanted to ask you, right? Like they buy the ETF. Some people buy like spot Bitcoin. But do you think they get the soundness part, or is it just like another kind of like high beta investment or gamble, or is the debasement trade an actual thing? Like, what are you hearing?
Yeah, it's a great question. I think like this ties into the sentiment for the past 6 to 12 months. It's the first time I've seen the fundamentals get so dislocated from the price. And part of the fundamentals can be the underlying network, second, third scaling. Really, when you look at Cash App and Square, turning on that many merchants, like all of these Spark, what they're doing. But then on the other side of that, I think equally or not even more impactful is the amount of liquidity pools coming in. I think it came out today that Charles Schwab started to roll off their trading for spot Bitcoin buying, and I think they're managing anywhere between $10 to $20 trillion in capital. But then to your point, I think it goes across the spectrum. It's really like barbell, where there's institutions adopting this because they can get some fees, and it's the thing coming. They know tokenization and all the stuff associated with crypto is coming, and in the future they can make money. And then there's another cycle, and we talked about it yesterday, like the Morgan Stanleys and Fidelity. I think they deeply understand that this asset solves a real pain in the market, like a gold 2.0, and has better properties. Even just from an allocation perspective, it's easier to buy slivers of it. And they're not just building ETFs. They're building real market structure around custody. How do they vertically integrate the solution? We saw the mortgage product that Coinbase did. I think that'll be natural evolution for banks and other institutions to offer, because the game is really, how do you get your financial service arms around as much Bitcoin? Because as the price appreciates, you can monetize that. I don't think that's widely held. I would say that is out of the norm, but it does exist. And the thing that I found in the past, call it 48 to 72 hours, that's probably the most bullish out of all of this, is that this, and we talked a little bit about it, but this is really a retail driven phenomenon. For better or worse, like, it's retail. Even on the stretch stuff, that's why you target to retail. It's like retail is interested in this. And retail means anything under the sun that's not institutional, that doesn't require a board to make an allocation. Even family office can fall in that camp if it's limited governance. Is you can ape into a position. If you're a private wealth client at Goldman or whatever, you call up your banker, you say, look, I need you to move this over. And the point is that this is why these banks are adopting this, and why BlackRock launched it, because they understood that's where all that pent up demand and flow came in and got us to 120. It wasn't necessarily new entrants coming into Coinbase. It was a lot of people that just wanted to buy Bitcoin through their brokerage. And why that's bullish is because if this is retail driven, and it has been the first 17 years, it was individuals figuring it out, taking it offline in cold storage. then it'll continue to be retail driven from the demand of better products. And that's bullish from an entrepreneurial perspective, because if you build the products, if you're native to the space and understand who you are and your peers are and what they will demand, especially living in the future or being a visionary in this space has nothing to do with like the Elon Musk seeing the future. It's just you've already allocated the majority of your wealth. So you have to live through those pain points of all the things with people getting kidnapped, cancers, dying, needing a loan, needing financial services. Then you build the things you need because you're already living there. And if we believe Bitcoin grows in portfolio and market share, then more people are going to need those solutions. And TradFi can't think like that because all other assets have been top down driven, not bottoms up. And so anybody listening to this, it's an ad for, I would highly encourage, if you find a niche, you should really figure it out, especially if the timing, because I think everyone, or at least me and Brom here, next 12 to 24 months are probably going to be positive for the price. And with that, things start breaking because the existing market structure looks like the same it's existed for the past 15 years outside of the ETFs.
I wonder why, and I always wondered this, you know, all these developers went to like crypto, it's so cool and fast and blah, blah. But if you're building on sound money, that's arguably way more interesting. And so I just wonder, and I also wonder what you think, like, why are we seeing that, right? Like, why is it so hard? Why is like the whole speculation and the nihilism, or like the, you know, prediction markets and whatever, like all this fast stuff is way more interesting apparently to technical people or builders or entrepreneurs than building on Bitcoin. Yeah,
I mean, I think it all just goes back to the true clownness or peak clown world that we live in, that what's up is down and down is up and everything is noisy. We talked about it where Allbirds, you know, did whatever gap up by launching an AI company from a shoe company. Yeah. And I think that it's really easy when you pinpoint the incentives. So like one step back, I don't know what the realization or the conclusion is for the word, but I think the natural, like, same stigma that Bitcoin exists when you say the word and people are just like, ugh. I think sound money and hard money have that stigma of the prepper and the gold bug. And so I like the version, I'm not saying we use it, but like rationalist, right? I just want a rationalist. I want rational money that doesn't inflate away, that can be debased, that's sovereign neutral. And to your point, this is really where I've had a lot of respect for the individuals building the space that have stayed principled. The one I call out is my previous firm On-Chain, because they initially were supporting ETH. They moved away from that. But there was a lot of venture backing that wanted, if they were going to raise more capital, to support other cryptocurrencies, rehypothecate collateral. We know how that goes in the credit market with Bitcoin. And it's because if you're going to get funding, if you're having Wall Street, because Wall Street understands velocity, they understand management fees, they understand diversification. It's insanely hard for somebody to wrap their head around why this is the asset versus everything else, and then also to deeply understand it and see where you can find value. Because if you go back 100 years, what was banking? Banking was, in the truest sense, how do I custody and preserve the asset and maybe layer on some financial services, but it was very conservative. And if you live in this world where you increasingly financialize it, you increasingly bring complexity, and there's no real complexity in buy Bitcoin, store it. And River's a great example of doing things the right way as well. And so the opposite is the momentum and incentives for venture capitalists, LPs, and everything that goes downstream of that to fund things that pattern recognize to what does TradFi look like. And so that's the thing. And then to the credit, or, you know, no fault, it's the world we live in, is entrepreneurs have to pick, do I want to raise the money, stay principled, build slower? And these were all real, like, impactful things, as I saw from, I carry this as a badge of honor, even though it shouldn't be. I really do. It's like, I was at Google, that's whatever, but I was at WeWork, and I was living, you know, sitting, working with Adam Newman while the whole world was saying that we were the hottest thing, and I understood it. And I think part of understanding that it was all a Ponzi was because I was reading the Bitcoin Standard. So this was 17, and the joke is I was lighting money on fire while I was learning about money. And so that helped me see all that liquidity just kind of drowned out the soundness and made everyone think they're smart until they're not. And then I came into the Bitcoin space, and I saw a similar thing with all this money that comes in. It kind of clouds a lot of the judgment in crypto and sometimes in Bitcoin building. So I think those are the components. It's just market forces that keep everyone going. Mm-hmm. And I always like the quote of, like, what's obvious is obviously wrong. right? Because it's similar with Bitcoin, but it's similar with being like principled and conservative. Right now, we live in this world where it's somewhat controversial to say that Bitcoin and gold are money, everything else is credit, and the reality is you should stack sats and stay humble and park it in a place that's safe, and then just go back to producing value. And that you shouldn't go and speculate on these Bitcoin derivatives or the stock market and all these things that have counterparty risk. And then maybe the last thing I'll say, this is kind of a funny thing that came to mind, is I heard once, I don't know, it was before he kind of went crazy, was Jordan Peterson made this comment of, it was when he was going down this bent of like immigration and the notion of you want to insert any kind of variance at a very limited rate because you add too much and you increase like real chaos. And that we take for granted that when we go to bed at night, most people listening, definitely me and you, we sleep easy. Nobody breaks into our house. No bear rips us apart. No bad actor comes in. And in that similar vein, like we take for granted that, and a similar thing with like the grocery store, it's like a modern marvel that all these things show up, that we take for granted because we've been lulled to sleep in Western markets, that the banks will always work, the capital will always be there, there will be no air pockets. And in post-COVID, we've seen that as the exact opposite. And so it's just a different paradigm, and you have to underwrite risk in a fundamentally different way. And even if you theoretically can make a little bit more money, should you, is the question, because the downside is not worth the upside risk.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue.
Yeah, it's funny because I have... now less, but I really felt like this action bias, right? Like, oh, I also, I have Bitcoin for my savings. I also need to invest and do some stuff. Like, that is now way less. And I have to say, it is way more chill, right? Like you sleep better. And the funny thing is, I don't know if it's Warren Buffett or Druckenmiller, I don't know. It's just like, if you find the one thing, just go all in on the one thing, like for a long
all your eggs
time.
in one basket and watch it closely. I'll share an anecdote I think you'll appreciate is all of these things everyone's had to go through, and I was there. I was in the space. I worked at the Block Crypto in 2019, so I was in the middle of it. I was still Bitcoin only, but I sat all around it. And so when you get around it, you start to learn about all the things, like Solana is a great example. And you could see, like, just a technologist, you're like, oh, well, this has the momentum, it has devs, it has marketing, this thing's going to take off. So I had this opportunity, right, to buy it at 10 cents and $1 and blah, blah, blah. And when I was at Unchained, this was in 2020, I was just doing this real soul searching, like, do you kind of make some money from this? And this was over a dinner with Cam and Parker, and I forget who else, but point being is, it was the discussion, it was Parker's guidance around, like, look, you could make some money, but there's two aspects that are like really zero sum and negative. Is one, crypto investing is zero sum, right? So somebody's going to get on the other side of that bag and lose their wealth. But the other one that was honestly more profound, it's what you just hit on, is you lose the mental clarity of doing what you're supposed to be doing day to day because now you're trading it. Explicitly or implicitly, now you're sitting there, you're waiting for when do you time it, when do you pay your taxes, when do you get out of the position. Versus, again, maybe you can theoretically make a little bit more marginal capital or Bitcoin, but is it worth the time and attention versus focusing on your craft? And I think that's a big, like, pervasive dark matter component of this whole world we live in, is that when everyone turns into a speculator and trying to create all these products to make money, they're actually not focusing on the thing that they were meant to do. And that's how you end up in a world where we're still, like, trying to figure out how to fly cars.
Fully agree. I mean, also crypto is just fiat on steroids. Right.
It was the test net. It was the test net. It was the trial before the real.
Yeah. And then Pump.fun came along and just killed it all, right? Because anyone could build a crypto coin. And I agree. I mean, I've also stayed up until 3 a.m. to buy some Bored Ape land or whatever. It's just fucking stupid. It's so stupid.
What was the ROI on that? Maybe a lot. Maybe you learned it was
I did make money with NFTs, but way less than I could have made it. Like, I was so blinded by the fucking greed at that point. I probably made like 10 I could have made like, I want to be honest, 6-7x more or something. Which I could have easily done if I just wasn't blinded by the greed. So, and it's funny because I now I never really think about it. It's just, now it comes up, but I did think about it before, and it's, or like had I don't want to say resentments too much, but like, just felt like, oh fuck, I should have done this and that. But it's a trap, right? And it's way nicer to just sleep. Like you said, I'm living in this parallel money system, and I'm just trying to become a better person. That's basically it. Like, I don't want to mess with all this other stuff. And it's funny because it's like you said, you used the word conservative. I don't know if it's conservative because a lot of people still think, if you're 90+% in Bitcoin, you're insane. So, it's just a perception of the person saying the word conservative, right? But for me, ending up with Bitcoin is just the most logical, rational conclusion that I could have come to. And so that is actually a pretty good feeling because I've never felt like that in crypto or, in stocks. And even not in the beginning of when I found Bitcoin, like in 2013, 14, I was day trading for a few months with my friends. And, there was then Litecoin and all this crazy stuff. And after 3 or 4 months, I remember just laying in bed, almost hallucinating, like seeing all the charts and then just realizing like, okay, the trading is not for me. Like, I am not a trader guy, right? But it took me a very long time, I think, to get to the point that we're talking about, to just be, just try to create value, earn money, save in Bitcoin, man. And it's very simple. And I love that the memes were already there for a very long time, right?
Yeah.
Like, stay humble, stack sets, hone your craft, and that's just it.
We don't have to go deep here, but tying into what you said around it is like, it's very underappreciated. It sounds like cope of the clarity you get if you want to go to the meta level of, when you understand Bitcoin, you just understand from first principles where value derives from, right? And so I was talking with a client and they were, it was just a little funky because the price and the FUD and all this stuff. And when you're newer and you just get moved a little bit harder, especially with everything working in our favor in 25 and the price doing what it did. And the point being is it just hit me as I was talking because I could sense it. And I was saying you can't put a price on the clarity that you understand the market because you understand the stock market for what it is. You understand all the things that exist. And I think that's just an important function of once you get how the money works, everything else is downstream of that. And you can't really put a price, even if the volatility is not working in your favor currently. That clarity is the thing that will protect you into the future. And it just doesn't get talked about because it's not monetarily like directly correlated. But I think on the other side of it, those people will make a lot more money in the future as well.
Yeah, I agree. So you are obviously building in this space. We've been working together and you just launched a new, I want to say, not even part of the business is an extension, right? And it's called Onramp Finance. And I thought it was interesting. You have custody into dollars and allocated gold alongside Bitcoin. And we saw Tether do the same, River launching a banking product. So what is the Bitcoin gold dollar end game? Like, why do you end up there? I mean, we had some quarrels around gold, right?
I love it. So we don't want to make this a shilly podcast, and you set this up perfectly because everything that we stand for was embedded in the first 30 minutes of this pod. Like, independent of what Onramp is doing, it's how we look at the world, and me personally. And when I think about, just so you know, because I don't necessarily know if you know this, that building this space for the past, call it 6-7 years, I've always had this vision and wanted dollars next to Bitcoin, right? Like from a just unified experience. We live in a dollar denominated world. We hold vast majority of our wealth in Bitcoin. It's the rational thing to do to have one login to see your dollars, be able to manage them, lend against it. So the post new administration and Genius Act really opened up the aperture for effectively anyone to build on banking rails. And so that was really the kind of like moment where we went and signed this deal with Stripe and were able to get a partnership there. But then to your question, what is Onramp Finance? Who is it for? And why are we including gold? Is there's a reality of like our existing clients get all this value, and then net new clients that have been wanting to like sign up and get better custody and all the things we're doing get that. But the big unlock, and this is the one that I think you'll find interesting and just curious your thoughts or push back, is when you get punched in the face, and that's, make no mistake, that's what we do all day long, talking to the Morgan Stanley's, Fidelities, that everyone thinks, oh, you're cute, Bitcoin only company, custody, blah, 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 is that 99.9% of the people are not where we are at and the listeners are at, meaning they may have some exposure to Bitcoin. They may not even be into Bitcoin yet, but the whole market is pushing speculation, poly market, derivatives, perpetuals, and they're looking for something that has trust, is sound. And from the Bitcoin side, there's a lot of firms that do different things really well, but nobody's really tied in and unified that experience. And so what Onramp Finance is independent of ever needing custody. You can buy Bitcoin through it, take it to self-custody. You get up to 5% cash earning on your cash, 1.5% on cash back on a card, so you can live on it. You can lend against the asset, IRA. But then to your point, you can actually get real gold allocations through our interface. It can sit in the Royal Canadian Mint, and then you can take delivery if you want. And the core idea is that independent of how much gold or anyone that Bitcoiners have, there's a rational reality that gold is $34 trillion today. Bitcoin sits at 1.7, that it was really naive for us, and I'll say me, to believe we were going to have people bypass and go directly from dollars and just to Bitcoin. There was going to be a maze in ways that people go from dollars to Bitcoin to gold, and in between, back and forth. No matter if they have to live on it, they need to start with gold and understand Bitcoin has better properties. Or we see this a lot where people have thousands of BTC and it runs up and they move 10, 20% into gold for a number of reasons. And so the only other thing I'll add is you're going to see more and more of this, because if you want to stay alive in the world, you have to provide value to your end client. And TradFi is coming, and they're maybe not adopting the best Bitcoin native products, but they are adopting products. Morgan Stanley is a great example. And the rational thought for those 99.9% of people that are going to try to buy Bitcoin is, why would you leave Bank of America if spot Bitcoin buys are right next to it and your mortgage is there and your car loan's there? And so if you're going to build a digital native firm, you have to start to embed some of those valuable products. My bet is on the digital native firms, because it's a new design surface, just from money movement as an example. Like, they're still thinking in legacy wires and those rails. And so kudos again to Alex, because this past week he came out with banking on Bitcoin, and they're doing some cash back, as well as, they have the world-class exchange. And then Tether, who TBD on their long-term intentions, but I still think they're one of the most sophisticated actors in how they carry their balance sheet, being long gold, Bitcoin, and real estate. And they announced a wallet that embedded dollars via Tether, tokenized gold. I don't know if you can take delivery of it, and BTC. Now, I think this is more for emerging markets individuals, because I think that's world class. If you're in a country, you can't get a bank account. Ours is more of like, it's global, but it's more like Western centric, because it's individuals looking for dollars, but cash on their dollars, being able to buy Bitcoin at the lowest rates, and then get all of that value in a financial service platform that has that conservative view we just talked about of like, look, you get best in class experience, you stack dollars, Bitcoin, gold if you need it. And then over time, if you want to, migrate over to multi-institution custody, you can do that as well.
Yeah. What I find interesting is that I worked in TradFi for, I want to say, 4 years, almost 4 years, with two huge banks in like the innovation department, right? And it was funny because there were like these banks that I worked at, but also their competitors, they had like different ideas around what is the actual value that we are providing, right? So there, you have banks that say like, well, we are basically a fintech, right? And like savings and how do you say, like debit and savings accounts, right? Those are free. Those are basically our acquisition channel. That is, the best product that there is. Eventually it's quite basic. And then based on that, when we acquire these people, we're going to build services for them. But there's also other banks that do the same in the first part, but the second part is just like what can we spend them with, basically, right? Like what can we sell to them versus can we build to them for them. And I think that what they never realized was that they were already kind of like disrupted by, I don't know, there's like 20 or 30,000 fintechs in the world, right? That all take a little piece of this huge banking institution and just do that better. But with Bitcoin, I think we aren't only talking about better integrated products and flows, etc., etc. We're actually talking about this new money part, which is Bitcoin. And I fully agree with you that being a digital native, right, without having the burden of needing to shed basically the entire fiat money history attached to a TradFi incumbent, I think is probably a bigger possible competitive advantage over, just starting a fintech company that takes a certain part from a business line of a bank, right? And so it's a different type of way to just approach business and the service and all these things when you are coming from this digital hard money type perspective. And I'm just very interested to see, like, how is that going to play out, right? Like, are people eventually, if they get in touch with Bitcoin through their TradFi bank and start paying more attention to Bitcoin, is there a way to create a competitive edge that will help people to actually move towards something that is way more digitally and Bitcoin native?
I think without question, like the best analogy, and I'd love the pushback here, is this is a little bit hyperbolic, but they're done. They're toast.
Yeah, I mean, I agree. I forgot to add that, but the fun thing was they never realized that they were already disrupted by all these fintechs, because there's just too much money to be made in classic.
Exactly right.
The classic Fiat Ponzi, basically.
That's exactly right. There's no need. And that's where credit to Fidelity for knowing this, and we'll see how it plays out long term. But they adopted Bitcoin because they understood that this had a potential to disrupt them. Without being long-winded, the analogy I always use is really Blockbuster and Netflix, because Netflix knew Blockbuster was dead 10 years before they did. They were just waiting for the rails to catch up, because Netflix knew in 96 when they launched, they were going to go to a different level, which was streaming. But the bandwidth wasn't there yet. So they were shipping using online. It wasn't until Blockbuster in 2001 started even just shipping online the DVDs. And by, I think it was 03, 04, it might have been 05. But point being is, once streaming happened, it was game over. And they knew that before then. So to your example, there's really two sides of this barbell where they're toast. One of them is the 60-40 fundamentally doesn't work anymore mathematically. So that's where all their capital is. That's where all the fees are. So if they're going to push people into a real bucket, into a sound asset like Bitcoin or gold, breaks their models, breaks their financial service firms. So that's one side of just being able to provide more economically rational assets to the user. And because economic forces will dictate, if you're losing money year over year, you're going to move to those products, because gold, it's crazy with the run it did. It's a $30 trillion asset, and most people don't know how to buy it. And that's because of, it's the same thing about, like, why are people focused on crypto? This is embedded in the psyche when you hear gold bugs. It's the same thing about Bitcoiners and the notion of, like, rationalists. It's a pejorative because it combats the way the existing system is set up. But the other side of it, which is probably more interesting to you from being an entrepreneur and enjoying technology, is this is just better plumbing. Like, when you think about how you can move digital dollars, Lightning, the notion of multi-institution custody, when you think about lending, net settling, escrow, mortgages, all the things you need for long tail risk and duration, if you're going to park your asset there, no custodians lasted that long. And so they're all still thinking in the single custodian mindset. And the economically rational thing to do is, as the price appreciates and the risk appreciates, whether it's with individuals, cancers, all the things that we see in the market where people are feeling the pain of having to be trusted, that person that's trusted with the wealth, it's a rational thing to do to upgrade your custody. But if Fidelity and others are offering the same thing, it gets really hard. It got hard enough to just adopt Bitcoin. It gets impossible to say, oh, now we're going to do a completely new form of custody. The analogy I say is it was nearly impossible for people to adopt a new form of money. Now, say there's a new form of custody for a new form of money, it gets pretty much on the long tail, and that's really where you see the native firms stepping in. Yeah.
And so I also think it's just that companies walking, right, over a long enough time frame. I think this, just like the adoption of Bitcoin, this just takes a lot of time for people to figure it out. But eventually, like you said, 60-40 is dead. Like this money will dry up. Also because people are leaving into Bitcoin or Bitcoin related products, and I don't know if we talked on here about we mentioned the private credit and people cannot, the institution, they cannot take money out and stuff like that. It's all just signs of a change. Let's call it a change, right? But what I'm also very excited about, and you mentioned this before as well, that and also when you worked at WeWork, there were all these huge companies, right? With hundreds of people and hundreds of engineers, etc. But now you can just have like a 5, 6, 7 person team plus AI being able to do the exact same thing and get to a certain speed that you would need way more people for before. So I also see a lot of disruption happening there. What do you think? Like, do you think that just AI also comes at the right time for the people that want to build to actually be able to outcompete in the technical resources way, these incumbents that just have been there before?
Yeah, 100%. I mean, this ties into, you've been there at the beginning on the venture side and realizing, couldn't have forecasted it would play out exactly this well or like this, but it's people that have been disenfranchised, marginalized at their companies, the meritocracy not existing because of the bloat that exists at the companies, either being laid off or holding Bitcoin and having that parachute to leave. And then to your point, it sounds so simple. I hope it works. I think it will work. But Bitcoin, gold, dollars in today's world with the plumbing is not actually a structural thing per se. It's a taste thing, right? Like that's really where the value is how do you package, taste, get distribution. And so those are more of constructs around the barrier is less on what existed before with capital and infrastructure. It all ties back to the understanding of the market, where it's going. So yeah, it's. I think that it's going to be the most opportune time, especially as more of the plumbing and then more of the need. I think that's the big thing we just forget is like we're still in this is all an experiment. And Bitcoin being at 70 to 120K is also a new thing. The last all-time high was 67. And so as the price starts to run up, the existing market looks the exact same since 2012 or 14 outside of ETFs, when ETFs are still like going backwards if you think about it, because you put a wrapper around the centralized custodian. So the demand of the market, those individuals will demand things, and that's where the entrepreneurs step in to build. I want to show you this really quick, just because it's fire, and we're having a new website, and this is actually just really quick. So this is a new deal Matt Ball put together. But the one thing I want to call out, because this will be live, I don't know if there'll be any left, but this is the main. So this will be our little stretch competitor, where you can kind of put how much cash versus BTC you want to hold in cold storage. And on a blended rate, we say that, risk adjusted, you end up with more dollars, but also less risk. But the big thing I want to call out is we have 210 Genesis program. So anybody that fits within that 210 gets locked in at all these high rates we talked about. They get some Bitcoin. And then we got our buddy Parker signing books and a whole like welcome kit and a bunch of other stuff. You'll find it on the website, but I just got to shill it because Bram might want to be one of those first 210, and we'll get him in as a global client.
For sure. Check it out. So, it's funny you mentioned like this, and we have our own quarrels and discussions, but I think you and I both agree that there's a certain on the direction that we're going, right? And one of the things we're also seeing, like less than 1% or maybe 2% of people are actually paying for these AI tools, these LLMs, right? And they already have like crazy valuations, but less than 0.01 or something % of people have an actual like material Bitcoin allocation. And like we're talking about, there's going to be your building, but there's more people that are going to build. How early do you still think we are? Like, is the I say it a lot, and you sometimes smirk or laugh, but I wanted to get your take. Like, how early is it still?
So, perfect question. I truly believe we're so early that we hadn't figured out custody. And the analogy that I use and the way I think about building is you're going to get to a penetration point of like 1 to 3% of the market. It'll be hundreds of thousands of dollars in Bitcoin, and a market standard will form where people won't know anything that we're talking about. They will just go to trusted places where they don't have to think about it, and they just know whatever. I think of it as like low yield, high yield, that the market will coalesce around. Low yield savings is like gold, high yield's Bitcoin. And the analogy that I use is if you go to, or the precedent that I use is if you go to the 70s and you look at PCs, it was groups like this that go to meetups, and they were arguing around what was the best multi-sig setup and the best hardware device. And in that analogy, they were arguing about the motherboard, the hard drive, how to put together the right computer. And then it took people that came into the space and realized the value that if everyone could have it, but not have to worry about it. And so they shipped the personal computer. And so I think of what we're trying to build, and even if it's not us, there will be somebody that builds generational companies. I hope it's us. I plan it to be us, that effectively ships MacBooks. And what that means is it just works. You click a button, you get access to the hardest form of money. You don't have to worry about the custody. You don't have to worry about the financial services. You know it works. You get to preserve your wealth, go back to your family and time and delivering value. In the same way you open up that MacBook, but the MacBook has X amount of value. When it's money, it's all the value in all the world. So that's how early we are, that we don't see that. And until we get that, that's when you see this thing actually really taking off globally.
It's funny, right? Because I also sometimes think like maybe we are the crazy ones, but I think all the early people ever have been the crazy ones, right? Like it is just part of being.
I think it's rational.
That.
I don't think we're crazy.
No, I also think. I mean, it's depending on who you ask, right? I also think it's rational, just like I said. But what I wanted to ask you, because you've been building longer in this space, like what. Also to kind of like wrap up, like what has changed for you? Like I think, like I just said, we agree on the direction, but is there anything that makes you like more bullish today on Bitcoin's role, like globally, than it did like 3 years ago?
Definitely. I think the three things that we talked about here, but to like recap, it's the insane. I mean, it came out today. I haven't got to play with it. Opus 4.7. So the insane velocity of AI and growth, and the natural convergence that Bitcoin will play an insane role there and have to, because of the permissioning and tooling is more robust in stablecoins, even though I expect stablecoins to take off first. The Iran conflict and the reality of settling commodities that are existential for a sovereign in Bitcoin. These are things that were talked about for decades that are happening now. And then the last one is the realization that TradFi is going to follow what retail does, because if they don't, the assets will leave their platform. And that's bullish for everything we're doing, or anybody wanting to build, because if that's true, and the main reason maybe to go double click there is because we live in a society that's been top down driven. And so you expect, well, I can't compete with Morgan Stanley, I can't compete with Fidelity, but you can, especially when the whole notion of building a startup is you're going into a growing market. Institutions don't serve the largest market, which is individual holders still hold the vast majority of Bitcoin in offline cold storage, and they're feeling that pain. But then B, if that continues to be the case and Bitcoin's growing in adoption, that means that total addressable market is growing and nobody's servicing it. And so you get like, it's like Bitcoin amplified, right? Is your true Bitcoin squared or true amplified Bitcoin is you literally get the trend of a hypergrowth company on a hypergrowth asset. And what is that multiple? It's significantly above Bitcoin.
All right. To wrap up, if you could leave your kids with just one piece of financial advice for the next 30 years, and it cannot be buy Bitcoin, what would it be?
Oh, that's easy. Money doesn't grow on trees.
So?
Just money doesn't grow on trees. Like value derives from actual work and effort. That there's no such thing as a free lunch. That's the thing we all forget about. And so when everyone gets excited about all these speculative investments, if it's too good to be true, it's too good to be true. I had to learn this. I don't want to say the hard way, but I grew up. You know, you want to be fast, you want to be quick, and you learn. You just get burned, and then it kind of carries with you. And then you live in this space. And the whole game of this whole thing we're talking about, whether you're building or investing, is just capital at risk. You don't die. You just need to stay alive. And there's just way more bodies that float down the river than people hanging out, and then you just never hear from them again.
That is true. That is true. All right, that's great advice. Well, thanks again for this great conversation. I hope people found it valuable. And we probably talk tomorrow. So
we're talking tomorrow. Good one, Bram.
Cheers, brother.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.